Today's video will be a very clear and simple view as to how I believe the most money is going to be made over the next bull run. And on top of that, I'm going to be giving you my strategy as to how I'm deploying and where I think the bull market will start. Now, of course, some of this is conjecture and hypothetical, so you're going to have to do your own research here, but this is how I'm playing the next bull market. And this is precisely how I think I'm going to maximize exposure. Check this out. Bitcoin has been sitting in this range here between $25,000 and $27,000 since it collapsed here down from about $30,000 just a few weeks ago. Now, like I told you, most people would be screaming, bear euphoria, it's going to zero. And that's exactly what we got on the timeline. And the thing about it is that I don't think that that necessarily has to happen. However, there are a few factors that are certainly swelling up in the meantime and not a ton of major bullish catalysts. Because we all know about the ETF that's supposed to be coming, and the odds of this happening are extremely high. In fact, they're rated at almost 100% to get a Bitcoin ETF live within the year of 2024, if not before. But the problem with that is that we don't have the ETF yet. So all of that new demand, all of that new money that will come with the ETF has not entered into the arena yet. So until that happens, that is the period of biggest risk. That is the period that we need to cross and be careful, because once we get the ETF and once we cross over a few different pieces of macro news, I think that we'll mostly have the clear go ahead to have a massive bull run. But of course, the elephant in the room in the crypto space right now is Binance, who apparently is not cooperating with US regulators. Now, whether or not Binance eventually goes down or not, I personally have my doubts. In fact, I heard a really compelling theory that Binance, because it's fundamentally based in the East and has its roots actually starting in China, might actually be strategic for the Chinese government to uphold. At the very worst, to keep that as a polar influence over the crypto space, because without Binance, Coinbase becomes the lead actor in the exchange space, and that could actually be seen as a strategic disadvantage for China. So in theory, even if Binance might have holes in its balance sheets or might be playing with fire a bit the way it's managing its exchange, the concept that it would just go to zero like FTX, I don't believe is a reality. But again, we will have to see. This Binance FUD is one of the biggest stinky clouds in the room right now with us in the crypto space. Nonetheless, Binance is going to continue to make headlines up until we get a Bitcoin ETF approved, which you're starting to feel like these two things might be related. The government might be trying to push Binance towards collapse here before approving a Bitcoin ETF. We will just have to wait and see. Again, if Binance does collapse, this could be another FTX-like drop on the Bitcoin price. We all know that it will have some major effect. That has no doubt. But whether or not it happens again is anybody's guess. We've seen CZ and Binance withstand and survive some absolutely horrific circumstances before. The other internal thing here is Tether. However, I'm not going to go down that rabbit hole. As the Tether FUD theories have been circling for so long, you can see so many videos on that. Whether or not Tether decides to collapse all of a sudden again is very uncertain. I made a video the other day showing that Tether now owns almost $100 billion in US short-term dated treasury bonds. And the US desperately needs people buying its bonds. And so with Tether buying more bonds than Saudi Arabia, Mexico, and some of the US's biggest allies and historical US debt buyers, is this actually a case for why Tether might not get completely destroyed by US lawmakers when it is kind of in the top 20 buyers of US government debt, which is literally keeping the country going right now, but don't tell anyone. Anyway, so as you see headlines like this, and as you see headlines like this, we just don't really know what's going on here. Of course, CZ saying that the executives are just taking a deserved break as, you know, there's this mass exodus from the Binance leadership team. That stuff doesn't really seem like it's a good explanation, murky at best. But again, betting on Binance's downfall is going to be a very tricky thing to time, even if you're right that it's eventually going to happen. But aside from these two pieces of FUD internally to the crypto space, we have a few pieces of macroeconomic data that I think are relevant here. Now, I want to state very clearly my thesis, which is that crypto will front run any changes in the liquidity cycle. However, we all know it reacts very strongly to liquidity events, as we saw in March of 2020. As we saw in the change in the Federal Reserve policy, crypto fell furthest, fastest, and that will be true if we get any black swan-like events again. But it will also repump the fastest as the liquidity conditions change. Look at this chart. Right now, what we're seeing here is that effectively the Fed is going to cut cut rates. We know they're going to cut rates at some point soon. And it usually happens, at least if you're looking at the last 20 years or so, usually here happens after we see an increase in unemployment here. That's this blue line starting to go down. You can see as soon as the blue line starts to dip here, we get this massive fall off in the actual Fed funds rate. Now, one important piece of data here is that you want to sell the last rate hike. And that's because despite what it might seem, as soon as the rate hikes peak and rates start getting cut down to zero, there is a mass exodus out of stocks. That is actually when the collapse in stock valuations tends to occur, at least historically, even though it seems like it shouldn't happen that way. So we want to brace for impact is when the Fed does pivot and the actual expected crash does happen, how does crypto react? Does it react like stocks? Do stocks sell off? How is this going to work? And if we're looking at traditional markets here, I mean, here is where the NASDAQ peaked back in 2021 here. And then if we're looking at where we are now, I mean, here we are. And it looks like this is not what you want to see here, right? This is not a break of the all-time high. Until proven otherwise, it does look a little like a failed return to new highs. And again, we see it kind of rolling over here. It's just not a really good sign. So will this crash or will this once again be a mega fake out? I don't know. I don't have a crystal ball. But what I want to prepare for is the opportunity to buy if it does. And that's why I'm keeping dry powder on the sideline just in case this flash crash as we're coming into the next liquidity printing event does happen. You see, I'm 100% convinced that we will print to solve the issues going on in the banking system, in the credit system, in the macro economy. That is the only tool that the economy uses to fix itself. Here's Arthur Hayes talking about exactly that. You need to listen closely to how he explains this, and then I'll explain the timing on how I think this is going to happen.
To talk about why we're about to see the biggest bull market we've ever seen, not only in crypto, but actually in traditional markets as well. So maybe that's a good place to start.
Sure. So I think the Fed and other central banks since the end of World War II have been on this Keynesian journey, right? And every time there's been a disturbance in the markets, they've decided to spend government money and then print it to fill the difference. And when there's a financial crisis because of credit and animal spirits, the Fed and other central banks destroy free markets in every part of the financial services sector. So we've gotten to this point where there is no more free markets, except for possibly the government debt markets, because they're so big and so important, it's very, very hard to control them. But however, debt to GDP globally is about 360%, and it's accelerating at an exponential rate. We're not having enough kids to grow into this debt. We're not becoming more productive in terms of harnessing the energy of the universe to do productive things. And so therefore, we're gonna have to print money to make sure the banking system and not only the governments are sound. And it's going to be...
You're going to print money until something breaks.
Until we no longer have faith in this iteration of civilization and the global government bond markets. These are the biggest markets in the world. It's trillions upon trillions of dollars that needs to get printed to make sure that the governments and the banking system is solvent. And so that's why I believe this is going to be the biggest bull market we've ever seen. Obviously, after that comes the biggest crash. But it's going to be fun while it lasted.
I agree with this analysis. You either print money here or you give up on the whole modern economy, and we're not going to do that. Governments are not going to do that because they would then relinquish control, and that kind of goes against the nature of what governments fundamentally want, their own self-interest. So the question is, when they start to swoop in and save the day, and based on historical trends, they're trying to crack unemployment, bring it down, bring the housing market down, and then they'll start injecting money. And that could all happen within the next sort of 6 months or so. Coincidentally, that's the gap between where we are and maybe a Bitcoin ETF. So what you want to do, in my opinion, is not get completely dragged out, not get completely liquidated in the meantime. But there's also the chance of Bitcoin going on a run and sort of front running these changes. For that reason, I'm in the market, but not 100% in the market. I'm keeping some dry powder on the side if we get this spike downwards between now and when things pick up again around the next halving, around the Bitcoin ETF, around the refinancing of the debt cycle. All of these things are going to present a window in which there's quite a risk of some shock to the downside. I'm not pretending I have a crystal ball here. I'm hedging my bets, and I'm a firm believer that we will have a massive, massive bull run. But the timing is going to be a bit tricky. So that's why I'm in the market, not fully in the market, and ready for potential downside. downside. Again, if we get a Bitcoin ETF and things pick onward and upward to the right, I'm very good at playing the bull market. I'm very excited to play the bull market. And I'm also excited to accumulate in the ranges if we're given good prices. Now, we might be very soon entering into the biggest bull run of all time, but in the short term, your job is not only to remain solvent, but to also protect your data. And for that reason, we're partnering up with NordVPN, which is the leading VPN provider, a product I use daily. I'm using it right now. And that is because I have recently been the victim of a hack, as you guys well know, that started with a data breach. And I love NordVPN because they have a product called Threat Protection, where they not only protect your IP address, but they also protect your computer from data leakage, man-in-the-middle attacks, and all kinds of wonderful services that you can protect yourself with for just $3 per month. It's an absolute insane value because the cost of leaking your data or losing your funds could be astronomical. We just saw Mark Cuban lose almost $1 million in cryptocurrency, and the last thing I want is for one of you guys to be a victim of data theft and cybercrime. So please check out NordVPN. I'm proud to have them as a sponsor of this video, and you can get safer here with just a few clicks, $3 a month, and of course it has a 30-day money-back guarantee, so there's pretty much no risk in trying this out. And I highly suggest if you're a crypto user in 2023, you are an absolute fool for not using a VPN, for not hiding your IP address, for not trying to protect your data in every single way that you can humanly possibly do, especially when the price point to do so is so very cheap. Remember, I'm taking these sponsors on to build out the best research team possible, to find the most relevant, most timely data possible. And of course, you signing up for NordVPN and getting safer here also supports the channel, so check out the link in the description below and you'll get a big, fat, juicy discount on NordVPN. With that said, thanks again to Nord for sponsoring this video, and back to my strategy on how I'm going to max out my profits on this bull run. Now, remember, as we were saying, you want to sell the last rate hike. Well, look, this upcoming event in September, they don't think that there's going to be any rate hikes. The market is saying 98% chance of 0 rate hikes. But does that mean there's going to be no more rate hikes at all? Well, if we go forward actually a little bit into December, you see there's actually a 34% chance, about a 1/3 chance, that there will be a rate hike of 25 basis points. You see here at the 525 to 550 range, and then what we'll have is the 550 to 575 range. That's what we're betting on here with 1/3 likelihood. So that means that the last rate hike that people should sell before the actual crash in traditional theory, not saying that we're in traditional times, again, we've kind of left the norm after the 2020 money printing episode. The question is the market going to sell that last rate hike? Is that what the smart money is going to do? And of course, what will that do to crypto? We don't exactly know, but I'm prepared to kind of just wait opportunistically through this. And that's why I have not all-in or said to all-in crypto or any risk asset just yet. In fact, I'll be doing a video on effectively how I'm allocating my assets, which is what I call the double barbell strategy, where you have a huge weighting in cash, waiting for opportunities, earning a tremendous amount of yield in treasuries, as well as you have your crypto, the stuff on the furthest end of the risk spectrum that I think is going to react best to liquidity conditions. And then within crypto, you have another barbell where you have most of your assets in the boomer coins, the safe stuff, Ethereum and Bitcoin. And then on the other side, you have assets spread into the stuff that could go to infinity or might go to 0. And the winners will offset whatever amount of losers you have. I'll have that video coming up. Let me know if you're excited in the comment section below. My double barbell strategy, I'll have a much deeper video on that. And of course, going over narratives and coins and stuff that I find interesting, trying to give you guys an overview without necessarily picking winners here on this channel because we have such a big community. I want to give you guys the tools to find this stuff out for yourself. So let me summarize this video really quickly. We are approaching what I believe, and Arthur Hayes argues here, is the biggest bull market in history. And that's because the liquidity required to save the economy, to finance all of the issues going on in the economy and not give up on this modern economic experiment is tremendous, the biggest it's ever been. But we're not at the moment where the cannons of liquidity are being unleashed yet. Crypto may experience a severe crash and a very severe pump as soon as liquidity changes. It could happen really, really fast. I just want to have some powder there to buy if we get some staggering drops, but I'm not going to pretend that I know exactly when it's going to happen or even if it's going to happen. And that's why I'm in the market with a nice chunk of coins. As always, I hope these videos are helping you. And if they are, you know what to do. Make sure to subscribe because we're going to be bringing you the updates that are helping you if you're the patient, long-term focused, opportunistic, systems-based investors that I hope you all are becoming. Again, I'm just a guy with a webcam. This is not financial advice because I'm not a financial advisor, of course, but I'm sharing my strategies and I hope they help you. And if they do, you know what to do. Smash up those likes, leave a comment in the comment section below. If you dislike the video, hit the dislike button. And as always, I will see you very soon on the next episode.